folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated? Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
Good morning, everyone.
Good morning.
Welcome back. Welcome back. Been a little while.
Good to be back.
We got a lot in store for you guys today. A lot of great setups. We have a lot of nice announcements for you all as well. Really, really exciting stuff coming up. I'm going to give it a few minutes, of course, to let people trickle on in here. But I'm sure you guys have tons of questions about what was said in the group a little while ago. So like we said before yesterday, we are starting account management for prop firm funded accounts. So for those of you who have My Forex Funds, FCMO, Nova funding funded accounts, we have started an account management for you, averaging 2 to 4% a month. So it's really awesome stuff. Very excited about it. More details will come. We're going to be holding a Zoom meeting at 2 p.m. Eastern today. So in about 6 hours from now, to answer all questions, kind of discuss the whole process, how it works. If anyone who's interested, how you guys can get involved. But anyways, guys, I appreciate your time today. Thank you very much. It's been a while since we were on. Now we're going to be on for the remainder of May. We're going to be holding live sessions every Wednesday at 8 a.m. and then every Saturday at 10 a.m. Eastern time. So make sure you mark off your calendar. We have one coming up on Saturday, 10 a.m. Eastern. And of course, if you guys want to drop your location in the chat, see where you guys are from, would love to see what pairs you guys are looking at, where you guys are located around the world. Let's get this chat going.
Quiet crowd today. Where's everybody from? Come on. Drop your location in the chat. There we go. We got Jamaica, Delaware, got the UK. Where else, guys?
Come on, guys. We got to wake up a little bit. Let's get this going. South Africa. Got a lot of South Africans on today.
Dang, yeah, for real. 1, 2, 3, 4, South Africa. Pretoria. Very nice.
What pairs you guys looking at? Remember, we're not here to send out signals to you guys. This is educational stuff only. If you guys are looking for signals, hop off. Because we're not giving them out. What pairs are you guys looking at? This is to help you guys. This is to help you learn, right? If you're here to receive and to try to take some trades to boost your little ego, it's not going to do you any good. This is here to help you learn to get better. What pairs are you guys looking at? I know you guys are doing analysis. You have to be. You guys are all traders. Come on. Let's go. UJ. All right. Euro USD. Yeah, Euro USD isn't something I really want to look at right now. Remember, guys, just because something may not look really good doesn't mean we should trade it, right? I don't really want to go over stuff that I don't have a clear bias on. It just wouldn't be worth it because there's not a setup on every pair every day. Right, we have to be patient. The people who can give setups on pairs every day are the people who are constantly failing, people who aren't real traders. Because that's not how the markets work. NZD Chef, GBP Chef, yep. I like those
People
pairs.
have
I'll be going
a
over.
dopamine addiction to constantly being in a trade. And that's not what makes you money in trading.
Mm-hmm. Gold, oil, NAS, US 30. Unfortunately, we only do Forex, guys, as you guys know. We don't do anything else. I will not be going over anything but Forex pairs. So we have GJ. Awesome. All right, we're going to go ahead and get started here in just 1 or 2 more minutes. Just want to wait for more people to trickle on in here. All right, we got ACAD, HF, EU.
Looks like everyone's loving your pairs now, Nate. ACAD, HF.
Oh, I may have sent the wrong. Tried to post our link in here. Oh, yeah, I sent the wrong one. Tried to send the link to the live session to the group, and everyone's hopping on like they want to join in. Whoops. Let me delete that. Sorry, guys. We'll get started here in just a second.
Using the StreamYard link?
Yeah. I sent the wrong one. I sent the one that people use to hop on as guests. Oh, well. Anyways, we'll get started here, guys. I'm going to share my screen. We'll get going. All right. Everyone see and hear me. Aiden, we good to go?
Yeah, we got you.
Okay. All right, guys. So we're going to go over all the pairs highlighted in red. That's what I have. So let's first start off by talking about AJ. So we haven't been on in quite some time now. It's been about a month. So a lot has transpired in the past month. Again, just for a disclaimer, none of these are signals. This is only to show analysis. Just because I have the risk to reward tool here does not mean I'm actually taking the trade. So if you are going to be taking a trade, you are responsible for every single profit and every single loss that you incur. This is for educational purposes only, just to try to help you with directional bias. At the end of the day, guys, if you are not on here to learn and to understand kind of how we trade and see what we're looking for and why we're looking for it, then it's probably in your best interest to hop off, because we're not here for signals. And signals, for you guys, it's not going to work. It's not going to help you become a professional trader, and you will always just end up losing in the end. Through 6 years of experience, trust me when I tell you that is a fact, because I've been through it all before. So again, not signals, but strictly analysis and helping with directional bias. So anyways, on the higher time frame, and of course, I know you can't see it clearly. I know I'm just zoomed out. I just want to show you the bigger picture here, so it is a little blurry. But anyways, we can see that on a higher time frame, we are making higher highs, higher lows. We are in an overall bullish market from a 4-hour daily, weekly perspective. All right. However, we're currently in this corrective phase, lower lows and lower highs, at least within this current trend. Right. So within this current trend, have we broken the prior structure high? We have not. We've made a low, we've made a high, we've made a low, we've made a lower high. And could we make a lower low? We could. We are still counter trend bearish from a 4-hour daily perspective. So with that being said, we have to be careful when it comes down to buying, because we have come up into that last point of return, our last point of supply in the market prior to a potential rollover and a new higher time frame lower low, which could occur potentially around 84.3, which is really just this overall level of structure. Because if we look at it from a higher time frame standpoint, we can see that we made a higher high, a higher low, higher high, higher low, higher high. This is all just one overall pullback for a potential higher low for another higher high. This is all one expansion. So this is the range of the daily to the weekly time frame. So if we are going to be breaking structure to the downside higher time frame, we need to be breaking this low. We need to come down and break that low. And I just don't think that that is anything that we need to talk about right now. That is weeks to months to even years ahead of us. So we just need to focus on the here and now and the current trend. So we have come into the previous structure high. We could dig a little deeper into this last selling volume here, this area of demand. So we did tap into that level, and we did sweep a lot of higher time frame liquidity, these equal lows. We had that sell to buy, and then we can see on the 4-hour time frame, we broke the counter trend. Now, what I want to stress that's so important here is just because we broke this counter trend structure doesn't necessarily mean we're going to be pulling back to go long. All right. Aiden, if you want to really quick try to find the link to this, a lot of people are asking, they can't find it. Can you just help them out real quick? Anyways, so just because we've broken the counter trend structure doesn't mean we're necessarily bullish, right? Because what if this was just a liquidity run to just continue short? Right. So I always say, don't be so quick to judge breaks of structure. So many people do that, right? So many people will neglect the higher time frame. They'll neglect the fact that maybe we really didn't come into anything to signify that this is actually a break of structure. And what they'll do is they'll just see, oh, okay, previous high, oh, pull back to go long. Well, in this case, yes, it worked out because we swept higher time frame liquidity and we came into an overall objective level. So when we had that break of structure, it was more highly probable that we would, pull back to go long. What made it even more probable was the fact that we created a head and shoulders pattern. Shoulder, head, shoulder. So what do we know about head and shoulders? It's a retail formation. So it doesn't work. It doesn't make any sense in terms of how the markets actually move, right? The markets are moved through orders, right? So if everyone is selling below this low and the stop losses, aka liquidity, are above this high or wherever, then we know that these sort of strategies they just don't work in the market. We have to just use a little common sense when it comes to just understanding the basics of a financial market. Because first of all, if it was easy, everyone would be doing it and it wouldn't work as a result. That's just common sense. But retail, I mean, just something as simple as a pattern. Patterns don't work because patterns don't reflect the relationship between buyers and sellers in a market. What reflects the relationship between buyers and sellers is their point at which sellers want to sell and buyers want to buy. Supply and demand, institutional liquidity and manipulation surrounding certain times of the day. Very, very important, since the interbank algorithms set the high and low of the day at midnight. That doesn't mean that you know exactly where the high and low of the day is. That's not what I'm trying to say. But the algorithms already know what liquidity it needs to take before the day even starts. That's not something that we can predict. So that hopefully that answers your question so you don't ask it. Anyways, we failed to generate that lower low and we ended up making that higher high. So now we have swept higher time frame liquidity. We've broken the counter trend structure. We faked out from this head and shoulders. Every single one of those retail traders was probably shorting. And then price accumulated and went long and retail was stopped out. I mean, it proves itself time and time again. So I don't know why retail thinks that they know what they're doing. Anyways, we had a level here of interest. I didn't buy it here because we were already looking to buy CADJ and UJ last week, which turned out to be phenomenal trades. But anyways, we accumulated, we made a higher high, we pulled back into that last point of demand, right? So this is really where we had that break and retest that failed to generate that lower low. Again, retail is probably looking to break and retest that head and shoulders. Again, that's why we had some sort of selling volume. Failure to generate that lower low indicates that this area of supply is no longer valid, that this supply will now flip to demand here. And that's exactly why we had that reaction from where we did. All right. So like I said before, just because something is simple doesn't mean it's going to work every time. But again, if we understand how the markets can work and we create a simplistic strategy surrounding the realities and the underlying nature of the market, it can be very rewarding for us. We just have to do it the right way. So we formed a high, a low, a high, a low, a high. So we've had this 1 drive, 2 drive, 3 drive cycle already. So the highest probable entry was sitting in and around this level. We accumulated and went long again. And we actually came into that final area of supply. I'm not going to scale in, it would just take too much time. But there's an area of supply here. So technically, this is the high that made this low. So this is the range here. So this is just an overall retracement for a potential lower low. So we have to be careful if we're looking to buy again. I still do like it because we are currently at least counter trend bullish. We accumulated in price. And where we broke this counter trend, we had a repricing event here and a repricing event here, right? So again, guys, these live sessions are not meant for me to literally teach you all the terminology and the strategy. It's here to just provide you an overall bias. So I'm not going to be going over what a repricing is. That we teach that in our mentorship. Anyways, very interesting level of repricing here. Area of demand. The reason why we have 2 is because this repricing never mitigated this level of demand here. So we have multiple levels. Why do I have 2 risk to rewards here? Because think about it. If you were to place your entry here, where is the most appropriate stop loss that you'd have to place? Below the low. You'd have to, because technically this is one expansionary move. So could we get an overall retracement that's 99% of the way and then we go long? Yes, because that's still higher low, higher high, higher low, higher high. It still makes sense in terms of market structure. So the most appropriate stop loss is below this low. For those people who don't want to have more than a 20 pip stop loss, you're thinking about trading the wrong way. I'm sorry, but you are, because you're not basing it upon price action, what the market is showing you. You're basing it upon what you think is the best risk reward for you. And that the market doesn't give a rat's behind about you. It doesn't. So we have to be placing our stops at the most appropriate levels. So that's why we have the stop loss here, but we also have a stop loss here. So splitting up your position, half risk and half risk, now we can take 2.5% plus 4.6%. So that's what, like, let's call it 7, around that much. So divide that by 2 because you're using half and half. That's 3.5% total. Meaning instead of a 2.5 risk to reward, now you have an average of 3.5. So it helps to increase your risk to reward just in case price ends up just hitting that level and going long. But if it ends up sweeping that low and then going long, well, then at least you're still in this position. And then the profit that you make from this position here would mitigate the loss that you incurred here. So it's just a smart way to go about splitting up your position. But we also have an area of interest here. I would treat this as one trade. Now, again, I'm not saying I'm buying this, but if you are going to buy it, I would treat this as one trade, right? So you'd have to split it up, half risk on this position and then half risk on these 2 positions, meaning quarter risk and quarter risk there. So hopefully that makes sense. But again, we've already come up into that objective point, so we just have to be careful because price had a very strong reaction from it. And could we just end up, making a lower low, potentially, because the structure still is to the downside. Same thing with AUD USD. Structure is still to the downside. If we look at the higher time frame levels, we can see that currently within this trend, forget about this for a second, right? Even though we're bullish there, we're currently on a 4-hour daily perspective still bearish. So at what point would we potentially go long? The answer to that question lies now in this expansionary move. So we have to see where could price pull back into before potentially going long again. And that is going to be right in here. So forget the higher time frame. I mean, well, don't forget that, but forget that, we had, a huge sell to buy. We had that repricing, which is exactly why price stopped where it did. But just take a look at what's going on in here within this expansionary move. Where do we look for? What do we look for? We look for the last selling volume that price failed to generate the lower low with that ended up producing the higher high. So that was really just this level of selling volume here. Because if we were to continue with this trend, we would have naturally made a lower low, but we stopped here and we made a higher high. So that supply level will turn into our demand. And we can see that we have imbalance here as well. The straight buying volume in there. We have this higher time frame demand level right there. So price has not even reached that. And in fact, we've made equal lows. This low did not even take out this low. Do we really think that this is going to be a low in the market? No, most likely not. If it's going to be a low in the market, it's usually going to be some form of higher time frame liquidity run. Right? Usually highs and lows of the market come with very sharp moves. I mean, as we can see here, right? Very sharp move before continuing. Very sharp move before continuing. Sharp move before continuing, right? So it's usually some form of institutional manipulation, mitigation of prior levels, but it does it very quickly, get in and out, and then it continues. So scaling in, we know that we're still bearish until we at least hit this 0.6550 level. So what are we looking for? Well, we're currently bearish on this time frame, so we need to be looking for shorts until we at least hit the overall objective. See, if we don't know where price is going, we shouldn't be trading it, right? So that's why higher time frame objective is so important to have, right? So we scale in here. We created 1, 2, 3 touches, and then on AUD/USD, we had on a news event that occurred last month, a couple weeks ago. I don't know if it was like a CPI data, GDP for the USD or whatever, but it was a huge buy to sell, right? We had the institutional manipulation above the trend line, so enticing traders above the trend line resistance, trapping them long, and then going short. We ended up failing to generate a higher high within the current, counter trend uptrend, and instead we made a lower low. We broke the lower time frame structure and the higher time frame structure here. So now we understand that the new range of the market is going to be within here. This is the new range. We're likely not to take out this high because we've broken structure now. So if we were to take out the high, we'd most likely be in some sort of retracement to the upside again. That's not what we want to see in terms of market structure. So currently, we've come up and mitigated that buy to sell on a lower time frame. We swept liquidity in the process. We generated buy side liquidity just to sweep it. Again, that has to generate liquidity before being able to place large orders. And then it moves in the current direction. So the current trend here now, lower low, lower high, lower low, and now we're experiencing that overall pullback. So we had 2 potential levels. We had a lower time frame level just in case price just continued like this, we could continue to short it. But if we had an overall retracement, we could continue to short it like that from the higher time frame standpoint, if that makes sense. So that's why we had 2 levels. For one, we had lower low, lower high, lower low. So I was thinking, okay, these 2 repricing events here, these 2 levels of supply we could pull back into. We had a good reaction off of one of them, and we could have easily gone short just to continue with the overall structure of the market. But we ended up sweeping that high, coming up higher, having the overall retracement, and now we're looking at shorting off. So I treated this as 1 trade here and 1 trade here. So half risk and half risk, half risk and half risk. So obviously we didn't come up into our higher time frame zones yet. These are definitely still valid levels. So if we do sweep those, maybe because we have FOMC today, could see an interest rate hike. We also have NFP on Friday. So a lot of major USD news coming out before the end of the week. So could we see some manipulation to the upside prior to continuing short? Definitely. So definitely keeping these levels of interest open. But at the same time, we swept buy side liquidity. We had an overall retracement. If we just pull our fib just to show premium and discount, we came in, and I don't care about the fib levels. I just care about the fact that we came into premium price, right? We're in premium levels now. The market could actually fall now. So we're still in this trade, didn't hit our stop. And if it did, we would have gotten triggered into this position. So we lost 0.5% risk here. We're in a little bit of profit here on this trade. And if we roll over, then that trade will take care of that loss and we'll still be in profit nonetheless. Even if we were to lose this trade, and this trade, well, actually, since these are both the same stop, we wouldn't lose that trade. So let's just say, we come up a little higher, get triggered into one of those positions and go short. It doesn't matter because our risk to reward is high enough to take care of any losses that we incur throughout the way. Of course, you're not just buying and selling randomly, right? You have to be building confluence for every single possible trade, but we understand that we are following the lower time frame structure, meaning here, we could have easily come into here and then fell, and then we would never have come into this level. Then we would have won on these trades potentially. So, that's still the case now, but if the higher time frame actually comes into play here and we do have an overall retracement, then we have higher time frames to deal with, our higher time frame levels. So if we short off from there, sure, we'll lose here, but our risk reward is high enough to where to take care of that loss, no problem, or a series of losses, no problem, right? So when putting together risk to reward, obviously, like I said before, you have to understand an appropriate stop loss. You can't just have a random stop loss based upon what you want because the market, quite frankly, doesn't care about you, doesn't care about me, doesn't care about Aiden, doesn't care about anyone, right? You have to put your stop loss at a very appropriate position. Same with your take profits. So based upon the stop loss here above the previous high, based upon these two levels of supply, an appropriate take profit would be that higher time frame level. We would have a 1 to 3 and a 1 to 4.7. Right? So these are appropriate levels that would easily take care of any losses that we would incur. Also, based upon my overall win percentage, I need to have a certain risk to reward every time. Because at the end of the day, I don't care if I win or lose. Because in the long run, which many traders just don't focus on because they want to win every single trade possible, and they have that short-term instant gratification mindset, which is just terrible. I know my system works in the long run. So I don't care if I go on a losing streak because I know that if I have at least this risk to reward every time, based upon my average win percentage over a long period of time, I'm going to end up being profitable because it just ends up coming down to following my rules, following my confluences, and managing the trade the same way every single time. It's just repeating the same process over and over again, but you have to have that good psychology. You have to have a good trading plan, and you have to have good psychology in order to trade. After that, it doesn't matter if you win 10 trades in a row or lose 10 trades in a row, because in the long run, you're always going to be profitable if you have the right system and the right mindset in place. See, people who, get mad about losing trades or, have euphoria about winning trades, that's just all to flatter your little ego, right? It doesn't matter. That's why, the start of the year was probably one of the worst starts I've ever had in my trading career. Am I still a happy person? Absolutely. I don't care if I lose because now I hit a 1 to 22 on UJ over the past 3 trades, which eliminated every single loss that I've incurred since the start of the year. Hence why it does not matter if you lose a couple trades in a row. You have to get out of that mindset and focus on the long term and focus on your risk rewards. So sorry for that little rant. But anyways, CAD-J looking to continue long here. So same thing with all the other XXX yen pairs. I'm looking for overall continuations long. However, we have had that 3-drive cycle on all of those yen pairs, meaning 1 drive, 2 drive, 3 drive. Could we experience some sort of overall retracement prior to potentially going long again? Yes, that is a potential. However, if we look at it from a higher time frame perspective, for one, I do think we have more downside potential at around 93 because that's our previous level of demand, our higher time frame level of structure. We have a lot of imbalance, right? So even though we are counter trend, at least bearish here, I think that if we are to head towards this low, I think we need to come back up into this level, at least up into that level of supply, getting back up into premium price before falling again, because of the fact that we have taken out that previous high. Now we have to be careful because we did sweep all this liquidity. Could this just be a huge institutional liquidity run for then continuation short? Possibility, right? But I want to continue to trade with the overall trend of the market, which is currently bullish. We had a sell side liquidity run, And since then, we've been making higher highs, higher lows, continuing to trade it long until it breaks. So I'd like to see 104 be met. That would be my ultimate goal here. But if we have an overall retracement, could we potentially see this as some sort of maybe skewed head and shoulders potentially for a sell to buy? Having that overall retracement of, high, low, higher high, higher low, higher high, just like we saw on AUD USD. The lower time frame opportunities are going to be in here with the current structure. But if we break, does that mean that we're bearish? Not necessarily, because I think that we're still technically bullish until we at least reach this level, 104. So with that being said, then we have a higher time frame level to where when we broke the counter trend, that will turn into demand for us to potentially have an overall retracement to then continue long, right? But we just have to be careful across the board, using good risk management no matter how good our setups are. So anyways, what happened, and this is what we took last week. I know this is blurry, I'm just zoomed out. Higher high, higher low, higher high. So where's the range? Right in here. So where's our prior level of demand? Well, this was our last point of structure. If you see, this is our last buying volume before the overall pullback ensued. So where do we pull back into and have the reaction? Right here. So when we made a higher high, that will flip from supply to demand. And that's why we had the reaction from the level and we accumulated. Also, we created a head and shoulders, shoulder, head, shoulder, fake out, enticing retail shorts, and then we go long. So it was a great trade that VIP took last week. So congrats to everyone who took it. Anyway, so we accumulated, made the higher high again. So we look for the same principles. Higher time frame. Let's go to the 1 hour. This was the prior level of supply. It was sort of like that break and retest of the head and shoulders. Obviously, we failed to generate the lower low because we're looking for longs anyways. And then we went long. So that's really our last selling volume. We have area of imbalance. So we could push down into that level before continuations. However, if we just had a very slight pullback, we could come into this level here, which we're already in. So we're currently sitting in a little drawdown right now. But if, that's fine. If we ended up coming back down in here and going long, then obviously that risk to reward would take care of that loss, no problem. So definitely looking for continuations long, whether it be from these two levels or our higher time frame level at 96.5. Keep an eye on that level there. If we break then we'll know that this is just a liquidity run for continuations. Then we can potentially be looking for overall shorts, but we'll just keep an eye on it for now. Euro AUD. So with Euro AUD, let's look at the higher time frame first. And obviously we can see that we are clearly in a bullish uptrend. We're in a bullish uptrend, making higher highs, higher lows in the higher time frame. We have this previous structure high here, and I think that will act as liquidity. So if we extend that all the way over, we're just about there, meaning I think that's the objective the institutions are looking to take price, right? So continuations to the upside, at least into that level to at least sweep that high. Before any sort of retracement can occur, I think that liquidity should be run. So scaling down to a lower time frame, we had a lot of levels that failed to mitigate, right? We had levels of demand in here that failed to come into it. We had a level of demand in here that we failed to push down into. And that's okay. We just continue with the lower time frame structure, and that's fine, right? So right in here, we've made a high, we've made a low, we've made a higher high, we've made a higher low. We haven't broken the counter trend yet. I want to see further upside. So I have a couple of levels in mind. I think that since this is still the range of the market, could we have a further retracement down, maybe into this imbalance here, into that lower time frame level of demand, potentially, before continuing long? Or if this is actually the true mitigation, you can see that this is the overall demand level. We have that mitigation here. If that is the overall level, could we pull back into like the 50% of the imbalance here and take a potential long opportunity? Yeah, we could, because I think we have a lot of buy side liquidity that we need to run. Overall, we're bullish. We need to be looking for excuses to buy. All right, so not as clear. However, I do think that if you guys are able to find a buy setup that meets your rules, I think it would be good in terms of directional bias. Euro GBP. So Euro GBP is interesting. So I'm looking for 2 levels plus a little bit of a higher time frame level. So overall, we are bullish, right? We're making higher highs and higher lows. However, currently within the current trend, we are making lower lows and lower highs. You can see low, high. This is the high that generated this low. So this is simply just the overall retracement. So in regards to going long, we need to break this high before doing so, before that structure shifts. So currently we're still in a counter trend downtrend, and we haven't reached higher time frame objective yet because, well, first and foremost, we have a lot of sell side liquidity resting below here. But two, we have this huge higher time frame imbalance, straight buying volume that I think price needs to push down into. So in terms of a higher time frame structure, I believe that this could be a low, this could be a high. We have an overall retracement to make a low and then maybe make a higher high. So since we're still counter trend bearish, I want to still be looking to short it. So the reason why I have this black horizontal line here is because we didn't even come down and fill imbalance and come into this level of demand, which I think because we failed to do so, I think further downside is still expected. Even if we were to go long and before this level, I think that we at least need to come into here, and that could be a first take profit. So we have two levels here. First and foremost, we came into our last point of, well, really this is the last point of buying volume, but we came into this level of supply, swept all this liquidity with this move, and then broke structure, lower time frame and higher time frame to the downside. So I'm thinking, okay, well, structure has been broken. Now we can scale in to a lower time frame and look at these levels of repricing, these levels of supply. So we could easily, we're currently in drawdown again, but we have to trust the structure. So if it goes short, great, phenomenal. We actually had higher time frame volume price divergence. We pull up the VFI. You can see that while price is continuing to rise here, volume was significantly decreasing. Right, so that shows a potential reversal formation. Doesn't mean it's going to happen, but in this case, it did. It rolled over, so I had these two levels of supply to look at. If we run higher, because technically we have our last buying volume up in here with a little bit of imbalance right there, then we could sweep this high and then come into that level and then short off. We could be in for that 1 drive, 2 drive, 3 drive cycle before that A into B into C. So until we break this high, we're still bearish. I want to continue to be looking for shorts. So I could even just clone this, add that here, make that 88950, put that down to 8660, and then that could be right there. Very nice 1 to 7, right? So something like that could be looking for. GBP Swiss franc. So what's interesting about Swiss franc is, and this is what is a little bit tricky, especially over the past few months. We have been seeing a lot of seek and destroy, meaning sell side liquidities run, buy side liquidities run, sell side is run, buy sides run. So it's very difficult to trade these markets over the past few weeks to the past few months. So we just have to use good risk management and trust the long term. So anyways, we have a lot of buy side liquidity resting above this trend line resistance, I guess you could say. We have equal highs here. We did sweep higher time frame liquidity to the downside, having this huge sell to buy. What happened was we came into a lower time frame level of demand in here. So we essentially mitigated this huge sell to buy. We accumulated, and then we broke the counter trend structure. So we made a low, a high, a low, a high. So we pulled back. We had two levels. For one, we had this level of supply here that ended up stopping. We failed to make the lower low within this counter trend, and instead we formed the higher high. So I said that, okay, well, let's just say we potentially just have a very slight retracement. We just continue and we just trickle on up. Well, at least we could get into this position here. Stops could go at our second position, which is exactly what happened, right? So now the overall level, since we've made the higher high, where is that last selling volume? Well, it's right in here where the accumulation took place. So I am looking for continuation to the upside because, all signs are pointing to that. So still looking for upside here. If we can get some sort of lower time frame, maybe accumulation, and then a break of structure back to the upside, we could be looking for additional positions long. Let's see. Where is GBP Swiss franc? I don't know where it went. Anyways, GBP USD. So with GU, what we're looking for, obviously GU is significantly bullish, right? Pound is very strong, which is why we're looking for G-Chef longs. We're looking for EG shorts. We have a lot of imbalance in here. We have this previous high that we could run up into. We're currently bullish. So when we're currently bullish, we want to be looking for structure points to the left that we could sweep liquidity from, right? So this is the previous high. We could come up into this area of supply. So overall, what I'm trying to say is we're bullish, right? Obviously. 4-hour time frame, we're continuing to make higher highs and higher lows. That's just a fact. Lower time frame, let's identify the structure. So we've made a high, we've made a low, we've made a higher high. So could we make a higher low for a higher high? Potentially, yeah. Or we could just follow the lower time frame trend, high, low, high, low, high, low, high, and just keep going like that, right? So why would we be looking for shorts if we're in a bullish uptrend? Doesn't make sense. Again, keep it stupid simple, right? So we created a level of demand. We swept the liquidity coming into that level. I didn't trade that just because it wasn't very pretty. But anyways, we reacted from the level and then we made a higher high. So now we're starting this uptrend again. Higher high, higher low. So that second drive, we're looking for the pullback for the third drive. We had sell side liquidity I mentioned last week. I said that we could take out that sell side liquidity, come into this repricing event area of demand here and go long. That's exactly what happened. Made that higher high. And then what we did was we created equal lows. You can see almost like this head and shoulders that we're forming. Potential head and shoulders. So what do we know? Could be a fake out to go long. So where could that fake out come into? Well, taking sell side, we could come into really just this level of demand. Why? Because within the counter trend here, high, low, high, low, high, low, high. That's our last point of supply. We had the reaction from the supply, but we failed to make the lower low within the counter trend downtrend. And instead we made the higher high. So that will flip from supply to demand. So that's a really great level to be looking for longs from. Obviously stops will have to go below the low here. So that's what I'm looking for. Maybe NFP could provide some volatility in order for price to come into before continuing long. NZD USD, I'm looking for overall downside. We can see that we're currently still in a higher time frame downtrend. We made a low, high, low, high. I think we can make a lower low down into 0.6. Why 0.6? Well, for one, if I extend this over, we can see it kind of lines up with this area of demand on a higher time frame. I scale in. We have a lot of imbalance. We have this area of demand here. And really, even if this were to go long, we're counter trend bearish, right? So we're in this pullback phase. We haven't even reached the 50% mark. So I think that further downside is expected even if we were to go long. And I think that 0.6 level would be that good higher time frame objective point to aim for, right? So with the lower time frame, let's go to the 4-hour. We can see that we've created 1, 2, 3, 4, 5 touches of this trend line resistance, 1, 2, 3, 4, 5 touches of this trend line support. So this wedge pattern that retail is a part of. So we faked out to the upside, enticed buyers, rolled over to the downside, took their stops. And at that point, we broke the structure because we're overall bearish. Anyways, we need to be looking for shorts, not longs. So structure was broken, had an overall retracement, sweeping buy side liquidity, buy to sell into where? This supply. Why? Because look at the counter trend, high, low, failed to make that higher high, lower low. That's where the structure is broken. So that's that last buying volume. So that's where the mitigation needed to occur. That's exactly what we had. So if we look at structure from that perspective now, we can see that this is now a low, a high, a low. We're accumulating lower time frame for an overall retracement for a potential lower low again for this higher time frame structure, right? And we have a level of lower time frame supply at 6,260, which is right in here. So I think that further upside is still expected. I'm going to be looking to potentially buy from this level of demand. I know this is counter trend, so we just have to be careful because we could easily just roll over to the downside. We're overall bearish, so that could be the case. But if we get a reaction from that level, we may see further upside, at least until 6,260. Right, come back down, sweep liquidity, mitigate that level of demand, fulfill the accumulation, have one more drive, and then fall. Something like that maybe. But again, we did reach that premium level. I was looking for longs when price was in here, right? Before we pushed higher. So we did push up into premium. So if we are going to be buying in here for a potential counter trend opportunity into 6,260, we have to probably use lower risk because it's not as highly probable anymore because we pushed into premium levels. So could we roll over with the higher time frame? That's more of a probability than it was before when we were looking at it when price was essentially in here. Because at that point, we were accumulating, we broke the structure to the upside, and we had equal highs. So we wanted to go mitigate that level, take out those equal highs, come up into that level, take profit, and then go short. So hopefully we can see how we're, building confluence here, but also at the same time, knowing when to reduce risk in certain situations. USD Swiss franc. So with USHEF, because, NZD USD is bearish, AUD USD is bearish, I'm looking for dollar to strengthen a little bit. If we look at the higher time frame, yes, we are overall bearish on USHEF. So yes, this is a counter trend opportunity. However, from a structure standpoint, we have a low, we have a high, we have a lower low. So could we see a lower high, right? Low, high, low, high. This is all just sort of chop. So could we have one final drive for an overall pullback, maybe sweep liquidity before going short? Potentially. But let's see what's actually going on in the lower time frame. Well, in the lower time frame, we had equal lows and we swept it very swiftly, right? So sell to buy. We have relatively equal highs and we never came up into those higher time frame levels that we wanted. So I still think we can. And what I was looking for at the start of the week was when price opened right here, or it was like right here. Price opened to start the week. I wanted these two levels, this level of demand, this level of demand, where we swept liquidity, created that huge sell to buy, right? I wanted this sell side liquidity to be run. Sweeping sell side, that Friday's low, taking that out, and then going long. Well, we ended up taking out Friday's high and then pulling back and then mitigating that level, but I still liked longs overall. Because I still think we should push a little higher before running short. Again, this is counter trend, so we just have to be careful, right? Stops are below the low. So we'll see what happens with this trade. USD Chef, NZD Chef. So with NZD Swiss franc, we are looking for overall continuation short. From a higher time frame perspective, daily time frame, we're bearish. So what do we look to attack in an overall downtrend? Liquidity, right? So where's the nearest liquidity? That previous low, 5.3. So I think that we're going to attack 5.3 before anything else, right? So following the lower time frame structure now we can just scale in and be like, okay, lower time frame, lower low, lower high, looking for that lower low into 5.3. Now we know that we're following the lower time frame structure, so let's scale in even more. So now we're following the lower time frame, which this counter trend was failed right here, that failure to generate the higher high, and that's where the lower low is made. That's why we had that short from that level. Very beautiful trade. But anyways, lower time frame is low, high, low, high, low. This isn't one overall retracement, right? This right here. This is one overall expansion. So could we get one overall pullback for continuations? Sure, we could from a higher time frame perspective, definitely. Which is why I still have there's lower time frame levels. Hard to see. We have a level of supply here, and we have two repricing events here and here where we swept liquidity, right? So that was that huge buy to sell that ended the overall retracement for then the start of the expansion again. So from a higher time frame perspective, I would not like to see price come any higher than really this high anymore. So if we get an overall retracement, great. Lower low, lower high, lower low, lower high, lower low. That could happen. So definitely these three levels are of interest to me. But if we were to just continue with the lower time frame structure, which is simply just right here, low, high, low, high, low, high, low, high, low. Right? Where's the previous structure high? Right here. We created a channel enticing retail buys, and we broke out of it. It was simply just the mitigation of the supply to continue short. We actually sent that out. I think that was 2 weeks ago. Anyways, this is demand essentially. So when we had that huge buy to sell, we had a little bit of a reaction. Of course, we failed to generate the higher high, and instead we made the lower low. So that will turn into supply. Okay. So that's what we were looking for in a lower time frame. Again, trade with the lower time frame until it breaks. This is a huge 1 to 9 opportunity. So fine. I mean, if price were to just break through it and have an overall retracement, then we have our higher time frame levels. But if it doesn't, and we respect the lower time frame, then we can be in really good profit, which we are. Right? So now we can move stop. And I just think that if we're going to come higher, than this high, we're going to go long. So now stop can be moved from here to here, which mitigates some risk. all about the little things, guys. All about the little things. So we can see in here with the counter trend, high, low, high, low, high, low, failed to make that higher high, lower low. So we'll see what happens with NZD Swiss franc. What we could see if we scale in here, we came into this level of last point of buying volume, and we failed to make the higher high within this counter trend. And instead we stopped and made the lower low. So could we be looking for retracements to short off again? Absolutely. That could be that confirmation that we have on a lower time frame to continue with the overall structure of the market, right? So we had to just naturally expect that we're going to continue with structure. If we do, great, then we can look for confirmation like this to be looking for pullbacks to short. If we ended up making a higher high, we would have lost here, but then we would have had higher probable opportunities upon an overall retracement, because the probability of us going long or short is much higher than us going long. So you might as well take care of the lower time frame trend swings and then the higher time frame trend swings, each and all those levels. It's really, really not that difficult once you sort of get the hang of structure and you're just willing to accept risk and keep with risk management. Yeah, you're going to lose trades. It's guaranteed. However, following a very systematic approach, very simplistic approach that anyone can really understand and follow, if you aim for the long term, it's going to you're going to do well in the long term. You may not do well in the short term, but you're going to do well in the long term if you follow this. So anyways, we'll see what happens. Everyone who's in VIP, I don't see anything right now, but I'll keep you up to date. We had this sort of inside supply level here. For those of you who've taken our advanced course, you would know that that's inside supply. So we did have that retest of that level once we made the lower low. So we'll see what happens. We'll see if we can find an opportunity. We're not going to force anything, but we'll see what we can do. NJ, very similar to all the other yen pairs. I think that if price is going to go overall short, I think we should come up into this imbalance even further up into our last area of supply. So I think further upside is expected. From a higher time frame standpoint, we swept higher time frame lows, so that liquidity run. And then what happened here was we made a low, we made a high, we failed to make a lower low, we made a higher high. So could we be seeing an overall retracement for one more drive? Definitely a possibility. So that's what I'm going to look at first and foremost. So from a lower time frame standpoint, we came into a level of demand, had the reaction, made a higher high. So where's the counter trend? Well, low, high, low, high. So previous level of supply was right here, had the reaction, went long. So that's definitely a level of demand to look out for. We also had our last point of supply here that we had a reaction from. And that's a level of demand as well. So just in case we don't have a full retracement, we could be in for something like that. But having those two levels of interest will help. NZD CAD. So we're already into our higher time frame level on NZD CAD. What we'll notice is that we're making lower lows and lower highs. Even though we are overall bullish, we swept higher time frame liquidity with this wick. Sometimes it's hard to see, but that is a liquidity run. So now we have made a low. We've failed to make a higher high. We've made a lower low, a lower high. So now we're in this overall pullback phase. And I think that we're going to continue with this phase at least until we get into discount with this move, right? Which I think is going to be in and around that 0.8 level, psychological level, into higher time frame discount. So anyways, scaling in to a lower time frame, we had overall retracement area of demand in here. We failed to generate the higher high. We made the lower low. We generate liquidity. We run the liquidity to mitigate these two levels of supply to then roll over to the downside. So it's all just trending with the lower time frame, sweeping lower time frame liquidity, following the higher time frame. Again, trending with the lower time frame, sweeping lower time frame liquidity, following with the higher time frame. That's how kind of structure works. So we came up into those two levels, had a really great opportunity, and then we can see the failure to generate the higher high within this counter trend pullback. And then we started the downtrend to make the lower low and lower high sequence. So this is why I love NZD CAD. It just waves very beautifully. It mitigates very, it respects my style of trading so well. It respects supply and demand. It respects institutional liquidity runs and mitigations. It's just a really good pair to trade in my opinion. So go to the 1 hour. So when we failed to generate that higher high, we actually came into a lower time from the level of supply, but I mean, I didn't trade that. And then we made the lower low. So now we're looking at the end of this pullback here to start the expansionary move again. So now we've made a high, we've made a low. This is all just lower time frame, lower lows, lower highs. You could have traded supply, 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 and just keep trading it until it breaks. You're going to have, overall, you should be making more money and more profit trading with the lower time frame and then losing one trade than having not traded at all because you want to win 100% of your trades, right? Take risk when your rules are met. Counter trend, high, low, high, low, high, low, high, low, failed, lower low, last buying volume. So the sweep of this descending liquidity, we had 1, 2, 3, 4 touches. Retail is short here. Again, news comes out. News is used as the excuse to propel price in the overall direction in which it was always meant to go, or to mitigate price, to sweep liquidity. News is not random. It is not random. I can't stress that enough. It is not random. Do not try to trade the news with stupid buy stops and sell stops when news comes out. That is the worst way to trade the financial markets, guys. We have to be more professional than that. I know so many people do that kind of crap, and it's ridiculous how dumb that is. So we can see huge institutional move up, right? Everyone and their mother was probably buying this with the news, and I sold it from that point on, had a wick entry. Because I know how the markets work, so I understood that this is a false move, most likely. Of course, nothing is guaranteed. I could have lost the trade. But from a confluence and rule standpoint, it met my rules. I took the trade and it worked out and it made sense, right? So we rolled over. Now, where's the counter trend pullback? Right here. High, low, high, low, high, low. This is our prior level of demand. We had the reaction, failed to make the higher high, and instead we rolled over, made the lower low. So this is the end of the pullback. So where are our 2 repricing events? Well, we had one here, and then this high here failed to come up into our lower time frame, which is why we had 2 levels. So that's why when we started to trend down, we made the lower low in the higher time frame. We swept all this liquidity, overall retracement. Now I think we can go short again for another expansion because we've come up into our levels of supply. And we can also see here that retail is probably involved here. We had 1, 2, 3, 4 touches, 1, 2, 3, 4 touches. When price broke out, everyone's buying upon the breakout. So now we know that if everyone's buying, we should probably short off now. Observe the masses do the opposite, right? AUD, NZD. So with AUD, NZD, actually, let me go over Euro Chef first, and I'll go over AUD, NZD last. So with Euro Swiss franc, just to make it very quick and short, I don't have a lot of time left. We're making lower lows and lower highs as we go. That's the structure. So it's interesting because we're looking for shorts in the downtrend. So from our prior levels of supply, okay, we've had a lot of these mitigations. I'm not going to take the time to go over it. It would take too long. These are the 2 levels of supply. Essentially, this is the last buying volume before the sell-off occurred, before we broke the structure. Right? So lower time frame, if you want to take a look at this on your own, there's 2 levels of lower time frame supply that we're looking for, aka these 2 levels. So we're looking for shorts from the level. However, the fact that we broke the counter trend structure, had a equal low sell side liquidity run when we broke, we failed to, we didn't make a lower low first below this low. I would have liked it if we had made that lower low, but we didn't. So we can see on a higher time frame that this low here was run. That was a bad line. Anyways, you can see it. That low, if you look at it, that low took out that prior low. So that's a sell side liquidity run. Could this be a mitigation of something in here within that sell to buy to potentially go long? Either have an overall pullback before shorting or even make a higher high? Potentially. So I'm still looking for shorts from those levels. But if I scale in, you can see those 2 levels of supply, right? Our last buying volume. We have equal highs here that we haven't taken out yet. Right? This high didn't take out those highs yet. So equal highs. So we still have buy side liquidity. We still have an objective. But we also swept equal lows, sell to buy, made a higher high, and then created equal lows. So when this broke, I thought, okay, well, support had broken. This could easily be a sell to buy to have an expansion to the upside or an overall retracement. So this is definitely a possibility. this is the overall level of demand. However, I liked this level here at 9803 because this is the last point of supply. We didn't even have a reaction from it when we came into it, and instead we just blitzed right through it. So I think that supply could turn into demand, and that's where it would be. So I'm looking for further upside now. So looking for buys up into that level, and then we can be looking for shorts. Last one, AUD/NZD. Daily time frame perspective. So we have our higher time frame objective here at 1.1240. This is our last buying volume. I think that it is a very high probable chance that we'll at least hit that level at some point in the future. Potentially even a higher high, because we are bullish. We are making higher highs and higher lows. We've gone over this so many times, but I'll quickly go over it again for anyone who's new. Higher time frame back in 2015, we swept this low with that wick, with the 2020 COVID crash. Okay, COVID, just use that as the excuse again to move the market how it always does. 1, 2, 3, 4 touches of this ascending trend line. Price sells off, entices sellers. It's really just the objective to sweep 2015's low. We pull back into that trend line. So everyone who is thinking to sell it, this is just really, I can't stress this enough, guys. I don't understand from a mathematical volume liquidity-based, order-based approach. If you go to an institution, you see their order books, you see where all the contracts are placed. Why does it make sense to buy and sell off of subjective trend lines? It doesn't make any sense. It really doesn't make any sense. Smart money makes sense because it shows the way in which the orders and price action and order flow is being delivered to the market. Trend lines don't show that. Trend line was created because it's just an easy way to show you're connecting the dots. So it's like you're playing connect the dots when you're like 2 years old, right? It's essentially what it is. So it's like when adults are playing connect the dots, but doing it in financial markets and losing money instead of just playing as kids, right? Stupid. So they try to sell off, and good luck to them. I applaud them for allowing me to have that level of demand. Now we go long, we sweep their stop loss, of course. So higher high was formed. That becomes the new repricing. So we could easily, from a swing standpoint, just simply place a buy limit from that level. We came into that level very nicely, had the reaction from an accumulated lower time frame. So I have like lower time frame levels in here. We had the reaction, and again, counter trend, low, high, low, high, low, broke the structure, failed to make the lower low, higher high. So that will become the new level of demand on a lower time frame. So we ended up making a higher high again. So now that becomes our level of interest, that demand. So let's scale in. So before this level was met, we created buy side liquidity and sell side liquidity. Again, trying to shake everyone out of the market before it makes a move. So we create this high, enticing buyers, coming down, taking their stops, enticing sellers below the support, mitigating the level, and then going long with the overall trend. So now we know this is a type 2 manipulation. If you guys know, for those of you who've taken our courses, you know this type 2. So now this is the real move, an expansionary move in the market. And if we even were to go short, we haven't come up into objective. Where did the counter trend? And that's just what you have to ask the question. Where did the counter trend, and not the counter trend, this is the overall, this is an expansionary move. This is the counter trend. But where was the expansionary move stopped? This was the last point of demand. We failed to generate the higher high, and instead we stopped, made the lower low. So at least that area of supply, we haven't even hit that yet. So I definitely think we can make a higher high, but at least up into that level, which is why I have so much confluence and conviction to take the price long. So we have 2 levels that we're looking for. I think really this could be potentially the trade of the year, but we'll see. It's going to be a swing trade though. So we have 2 levels of demand. Why this level here? Well, because if you look at this counter trend, this is the last point of supply and before the structure was broken that price came into and had a reaction. And then we also had, our last selling volume in here. So that last, point of demand, essentially. So we had those 2 levels. So we had our overall retracement. We had those levels marked off. What do we create prior to coming into these levels? We create a huge range, liquidity. 1, 2, 3, essentially 1, 2, 3, 4 touches, 1, 2, 3 touches. So in a huge range. So again, when retail sees this huge move occur, they think, oh, we're breaking out to the downside. We broke support. We need to be selling it. Or we need to be waiting for the break and retest. So retail does that. It mitigates our first level. It pulls back. It break and retest into a prior level of supply. Again, they short off for the break and retest. And of course, it doesn't work and it goes long. So that becomes that supply to demand flip. So we had that reaction from that level right in here. And then we can see, whoops, you can see in here that before we came into that demand, we created this, kind of skewed head and shoulders pattern. You can see the right shoulder came into that left shoulder area, just kind of had a little skewed neckline. So when price broke and we had the reaction, again, break and retest, and then we went long, I thought, okay, well, this can turn into demand now and we'll pull back to go long. I mean, there's so many confluences that go with this, but yet it's still pushed down. This is why it's so important to use good risk management, because no matter how good the setup is, you still have the potential of losing it. So stops are below the low here. Right, we're still in this overall area of demand. So I'm still long this position. One stop, because I have 2 entries on this. Both entries are at half risk each at the same entry. One stops below the demand, one stops below the low. All right, so it doesn't matter if I lose this trade, I don't care, because I'm still in long from the higher time frame levels. I'm treating this as a swing trade. And then, because we haven't hit stop quite yet, if it comes down even further, then we have that higher time frame level that we had here. And then if it breaks that, well, then we'll just have to reevaluate. But from a higher time frame and lower time frame and liquidity standpoint, it really shouldn't go short. It really shouldn't take out this low, right? So essentially, either I win this trade here, because I'm currently still in, I either win this trade here that I'm in from the higher time frame level, or we have an overall retracement into our final last point of return demand, and I win that trade, right? So what's the probability, based upon everything that I just showed you, that price would take out this low? Very, very small. So the chances of me at least winning one of these trades is higher than losing them all. But again, you still use good risk management throughout. And even if I were to lose both of these at half risk each, both of these at half risk each, and then win, even if price were to take out this low right here, but still go long, and I was just in this position, that's half risk. That's 3-point-something%. We'll call it 3%, minus a half here, a half here, a half here, a half here, a half here. That's 2.5. So it's still net profit. So that's why risk to reward is so important. That's why splitting up risk and just maintaining good risk management is always key. All right, so looking for further upside, that's my higher time frame bias. We'll have to just kind of reevaluate at a later time and see if we have any lower time frame opportunities later. All right. So that's all I have for you guys today in terms of analysis. Sorry, that was a lot. I will take some questions. Sorry, I couldn't see the chat as I was going through, guys, so I apologize. Yeah, dude, I love A-Chef, N-Chef, N-CAD, and A-CAD. My favorite 4 pairs. But again, not just because they're my favorite pairs doesn't mean, you'll like them as well. Aiden loves the majors. He does well with the majors. I do well with those pairs that I just mentioned. So.
Got a quiet crowd today, bro.
So I know that was a lot, guys. So, just try to keep up with it as best you can. Mark off these levels as we go and go back and learn from them. Look at why I'm looking for what I'm looking for. And I'm not saying I'm perfect. I'm not. I will lose trades. I do. But, if you have a different bias than me, that's okay. We'll all have different biases. You can ask me questions about it. But at least, you're getting this information so that you can learn from it, have a better, clear direction on the market, and then learn things as you go and pick up on things that will help you in your trading. Because we're doing these, 2 times a week, 1 month on, 1 month off. So you stick with it. I think hopefully it provides you guys value. But I mean, if you guys are really interested in learning how we go about this process, which is it may sound daunting at first, but once you get your streamlined system down packed, it's really just about following that system and not caring if you win or lose. Right? So if you really want to learn how we go about trading this way, if you guys resonate with it, of course, feel free to head over to our website, Ariel Fx Trading. Just book a free call with me. Just love to chat, see if it's the right fit for you. If it's not, at least you'll know. And then you send you on your merry way and wish you nothing but the best of luck. If it is, then at least you'll know that, hey, look, this is something I want to pursue. And then we would love to potentially look at working with you going forward. All right. Any other questions for me? Anything else? Let me get out of this. There we go.
There we go.
Again, for those of you who want your questions answered in regards to funded account management, we're going to be holding a Zoom meeting at 2 p.m. Eastern today. So if you're not a part of our free Telegram or our free Discord or whatever, I can send the link here. I'm sure you guys are, but just in case.
Yeah, and the Discord as well. If you want to drop that link in the Discord server.
So we do pass challenges with a 100% money back guarantee. And if we fail your challenge, then we not only provide you the service feedback, we also pay for your challenge so you don't lose anything. So essentially you're guaranteed a funded account, and then we manage your account for free. Obviously we take a profit split, but you don't have to pay for us to manage it. So it's a really great opportunity for passive income for those of you who are not quite profitable yet or don't really have that ton of time to trade. Let me drop the link for our Discord in here if you guys don't have it. Let's see. Sorry, it's hard to find us. So many messages. Thank you.
I think someone was asking about Asian session. No, we really just prefer to trade London and New York regardless. You really shouldn't be trading Sydney. That's for sure. But yeah, I mean, I get it. If it's a pair like AUD JPY, where both of the currencies are Asian session currencies, then I think that's okay. But for the most part, just avoid trading. I mean, it's low volume in Asian session anyway. The real moves, regardless of the market, are going to happen in London, New York crossover.
Yeah.
Hopefully that answers your question.
Yeah, I mean, personally, I used to trade London session back when I was learning. I don't anymore because I realized New York session is really all I need. I don't need a trade every day. I don't need 5 trades a day. So I look for my setup and that's it. Win or lose, overall, all in the long term, will be profitable. You work a 9 to 5 in tech, so it's session. Again, I mean, preferably London, New York session. But again, you have to go based upon what the market gives you and not necessarily how you can go about trading it. Because again, the market doesn't care about you. It doesn't matter if you're awake at 1 a.m. Eastern time or midnight or 7 p.m. Eastern. It doesn't matter. Like if the only time you can trade is during Asian session, well, that doesn't mean you should trade it because again, the market doesn't care about you. You have to trade it you have to just respect the market. So you have to trade with your setups, build confluence for each trade and just set limit orders. Because if it gets triggered in London session while you sleep, well, that's fine. But again, you don't have to trade like every single session. You can do analysis when you get home from work. So since you live in Texas, I'm sure that's like Central Time or Mountain Time, maybe depending. So maybe 1 to 2 hours behind Eastern. So that's Asian sessions during your evening. So you can do your analysis. If you find areas of interest, then you can be placing limit orders before you go to bed, and that could hit while you're sleeping. But again, you probably, if you're not able to trade the London, New York sessions specifically, then you're probably not going to find your intraday, time and price movement. You're most likely going to have to trade off of like relatively higher time frame levels. If that makes sense. Question, I suppose it's not really necessary to trail since you know your levels for TP in accordance to risk. Well, I have my TP levels, yeah. And trailing stop, it's going to be different for every setup. So just like I mentioned on, like, what was it, NZD Chef, because I'm short NZD Chef from that lower time frame level. So remember, we had the counter trend making higher highs, higher lows, and then we failed to generate the higher high, and we made a lower low. So now, because of what happened in that specific setup, I can then move my stop loss just above the previous high to sort of mitigate a little risk. It's not break even, it's trailing it a little bit, but it's doing it strategically. But again, that's not something that I can really give you a streamlined system for. It's really just going to be different for every single setup. But I have my take profits there for a reason, right? I don't take profit just based on a 1-to-1 or 1-to-2 risk to reward, because that doesn't have anything to do with the levels in the market. I go based upon, when the structure breaks, lower or higher time frame, that's where I take profit. And then I take profit based upon levels in the market where a price could potentially reverse from me, right? So if we're trading in an uptrend, right, and I'm looking to buy, and there is an area of supply, obviously I'm not expecting for it to respect the supply. If we're in an uptrend, we're looking to make higher highs, right? So I'm naturally going to expect a higher high, but you could be taking partials at that area of supply just in case it respects and reverses from you, even though it's not likely. What I guess my whole point is be taking profit at highly probable reversal levels, or levels that you could see price potentially go against you, and everything else in between, you just need to trust it, right? Because price is gonna chop, price is gonna push up and push down, push up and push down, and if you're, if you can't control your emotions because you're looking at it 24/7, then you're going to be subject to all those intraday price movements that could not, it won't even matter. Because if you're buying and price starts to sell off, if you're looking at it real time, you're just sitting there. I mean, I could say this all day long, like, oh, just trust your analysis. And you'll be like, oh yeah, sure, I'll trust my analysis. But when you're actually doing it and you're sitting there and you're in a trade with live money and you're looking at price potentially go against you when you're already in profit, traders typically have a lot of emotions when it comes down to that. And they close the position early, they take partials, they move their stops, they do all these ridiculous things. And that's why people lose. So no matter how much I preach this stuff, it's like I have to let you guys fail to get the experience to then realize it for yourself. It's kind of like how it naturally has to be. But hopefully that makes sense.
The Zoom link is in our Discord server, and I think Nate, you already dropped it. Yeah, you did. Yeah. Just join the server, and that's where we'll drop it. We'll probably drop it in our Telegram, our free Telegram channels as well.
Yeah, I mean, if you guys are curious about it, it's really just Q&A, just kind of going over the process, how it works. We're trying to just provide solutions that otherwise aren't really there. The solutions that we're providing are, they take a long time to develop, because obviously I don't want to just provide a service that isn't up to our standards. If I wouldn't let my family use the service, I wouldn't let you guys use it, because again, I'm going to be very, very certain that I have to provide the best possible service if I'm like letting my family members do it. And that's kind of how I want to portray that onto you guys. So we've taken a lot of time to develop what we have. Again, it's an investment, so there's always going to be risk. Nothing is 100% guaranteed, unless you're aiming for just passing your challenge. I can pass your challenge guaranteed, even though it's not actually guaranteed. I provide a money back guarantee if I were to fail, and that includes the service fee and the challenge fee. to cover everything for you guys. So it's like either you get funded 100% or you don't pay. Now, fund management, obviously I can't guarantee that you will make profit. Although we have a very high success rate, that doesn't mean that I can't guarantee 100% of everyone will make money every month. A good chunk of people will, but again, I wish I could provide 100%, but that's just not how the world works. So it's an investment that you'll have to make. And of course, I'm going to tell you this right now. Please do not, if you are interested in this, do not do it if you can't afford to lose your initial investment, just in case. I don't want you pulling money out of your life savings to do this. You shouldn't even be trading live capital if you're not willing to lose it, just in your own personal account anyways. So that's just my kind of disclaimer for you guys, but we're finally able to put something together for our Nova funding funded accounts. We're able to manage those now. We can't do funding pips just because, again, I could do it, but it wouldn't provide as a highly probable return for you guys. Just based upon the intricate rules that it has on the funded account, I'm just not comfortable with having like a 50 or 60% success rate. I want at least a 70%, preferably 80 to 90% for you guys. So the majority of you actually do make consistent money. Now we are aiming towards working with my Forex funds and FTMO in terms of passing challenges. And again, that will probably be around a 70 to 80% success rate. But then managing those accounts as well become much easier because they're very relaxed in terms of their funded account rules. So within the passing of the challenge, if you are aiming for account management, the passing of the challenge will cost a lot less because there are different packages. Like we have like one where you could, purchase the service and then take signals that we send to you guys for your funded account. Well, that will cost a little bit more, obviously, because you're having the signal side. But if you're only just passing the challenge, then it's not going to cost nearly as much. And then you have the option to make it completely free for us to manage. So we can manage it for you for free. Obviously, we're going to be taking a profit split for the profits that we make. But you don't have to pay for the account management side, if that makes sense. But we actually do have a paid side to it. You can pay a down payment for the account management and have a higher profit split. If that's what you're after, which in all reality would do you well over the course of a few months and it would pay for itself. However, again, not a lot of people have all that money to upfront to do this. So that's why we want to give people options.
Life-changing things in the pipeline, guys. Crazy. Yeah, Brian.
With us again. Be patient because we're trying to. I don't want to just start something without us being very confident in it and us testing first and making sure everything is down packed, ready to go. So we'll be rolling stuff out, but again, we want to do our due diligence and make sure that we're providing the best service for you guys. Will the service be still available if you're currently down in your Nova account? It will be, but you can't have less than 2.5% drawdown. We won't trade it unless it's at least above. If you're on a $100,000 account, it has to be at least 97.5, or else it's not worth it for us to trade it because we can't take a profit split until we reach at least that starting balance of $100,000 again. Right. So we've set the rule. If you're down more than 2.5%, either you have to trade it yourself to get within those drawdown limits for us, or you just have to get a new account. So yeah, Chad had a good question. So it's 1,000 USD for us to manage the account for a 70-30 split. So you keep 70, we keep 30. If you want it to be free, if you don't want to pay anything for account management, that's okay. But it's a 50-50 split. But still, if we're making an average of 2, 3, maybe 4% a month, kind of pays for itself in a 1 to 2 months, essentially. I think I've ran the numbers on it. If you were to just go with the 50-50 split, because you have to pay for Nova at least, right? We do trade with FTMO and my Forex funds. If you guys have funded accounts for them, we do manage those accounts as well. But with Nova funding takes a 50% profit split the first month. The second month you make profit, it's 70-30. So you keep 70, they keep 30. And then the third month, I think is 80-20. So you keep 80, they keep 20. So essentially how it will work is if you pay, because you have to pay for the challenge, obviously. If you're going to have us pass it. I think the challenge is what, like 500 on Nova, 600, something like that. Let's just say 600. I'm not sure. $600 on Nova. And then the service fee for passing the challenge on a 100 grand account is $825. So you're sitting at $1,400 in total. That guarantees you get funded. So that is 1.4%. However, we have to make sure that Nova gets their payout first. So you have to double that. So essentially you have to make 2.8% your first month to cover essentially the Nova's profit split. And this is just for month one, remember. Cover Nova's profit split, and then your cut would essentially cover the service fee and the challenge fee. However, again, if you're doing the 50-50 split, you have to share that with us as well. So you have to double that again. So essentially it's 5.7%. So 5.7%, and if we're averaging 3% a month, essentially it's a risk-free investment after 2 months. So again, it has the probability of a very high ROI investment. However, again, just don't do it if you can't afford it. Just don't. Not many investments can you receive your money back after 2 months. I'll just tell you that.
It's ridiculous.
Essentially 100% ROI in 2 months, which is, just think about it in terms of trading, right? Making 100% return in 2 months, it's possible, but you're having to go full margin, essentially. It's not smart. It's stupid. But with stuff like this and how we can sort of utilize leveraging of capital and other systems to provide a highly probable return at a more safer approach, then it becomes, you're not increasing your risk, but you're increasing your return in that sense. Yeah, so the 70-30 is after Nova takes their cut. So whatever you net after Nova takes, we will take 30 and you will keep 70% of that, yes. Will you guys be algo trading the managed accounts? So that's a good question. That's stuff that we're going to be talking about on our call at 2 p.m. Eastern today. It's going to be a little bit of both. It's going to be algo and sort of manual intervention. So we're making sure that we're managing the accounts properly. However, it is going to be, in a sense, copy trading, but we have a system to where it's not going to flag your accounts. Again, I can't guarantee that it won't, but I'm going to say that it's probably a 1% chance that it will, right? So again, very, very slim, because we have like 60 different strategies, right? So 60 different, it's not like we're having just a couple of strategies trading on all the accounts, because that would easily flag it, right? But we have so many different strategies. All have done thorough back testing, thorough testing. We've forward tested them for a while. So not every single person is going to be trading the same strategy. Like, for instance, Chad, you would be on a different strategy than Sasha, right? So you guys would have different strategies. But the thing is like, just because one made you better than another one doesn't mean that, you're losing out, because we're always switching them as we go. If one strategy isn't doing so well, we're going to stop trading it like throughout the month, place another strategy on it, get you back up. Right. So it's very well managed, and we are ensuring that to the best of our ability that we are going about it in a way that goes with the rules of the funded account. We've done all this planning and everything. So we've been doing it one of the guys we know who also does something similar has been doing it for 4 months now, and he has no problem with it. So the system, the approach in the way that we're doing this has credibility in a sense. But again, I can't stress this enough. Nothing is guaranteed. As long as you understand that, I think we're good. But I will say this. If for some reason you are one of those unlucky people who we ending up in a loss, maybe not blowing the funded account, but end up in a loss, or even blowing the funded account, if you're one of those people, then what we will do for you, because again, we can't guarantee 100%, right? We just can't. It's not possible. What we will do is, if you wanted to try again, unfortunately, you have to pay for another challenge yourself, but we're going to pass that challenge for free. We will pass that challenge for you for free. So we'll get you back to that funded account status. And if you want to go 50-50 again, you won't have to pay for account management. So we're trying our best to give you guys the highest chance of success here. without having you, expend your capital? Can you upgrade later from 50 to, again, it's 70-30, not 80-20. But no, you can't. So if you wanted to get a 70-30, you'd have to just get a new account. You can't upgrade because that would defeat the purpose of having two different tiers. So, I mean, try it out for free, 50-50. If you like the results, and you can even take the profit that you make, then go get another challenge. And then you could upgrade to 70-30 with that new account. But whatever package that you go with, whether it be 50-50 or 70-30, will be set in stone for the life of that account. So again, all these questions, more of these questions will be answered. We're going to go into more depth this afternoon. If you're unable to make it live, no worries. We're going to hold another one tomorrow. I'm going to hold another one Friday. I'm thinking probably tomorrow morning. So Thursday morning, and then Friday afternoon, evening. So I'm trying to hit like all time zones for everyone around the world. So I'm doing one tomorrow morning, today at the afternoon, and then Friday in the evening. I think everyone will have the opportunity. I'm going to be getting on Saturday because we're having another live session to go over charts again to prepare for next week on Saturday, just like we do, 10 a.m. Eastern, and I'll be discussing it there again. Will you guys be selling your algos? So we do have algos for sale. We do. Other ones we don't. That's really just proprietary to us. But we do have some algos that if you guys have been following us on like IG, we post like algo stuff with our live accounts. All that is with the algos that we do sell. And you can find that on our website under expert advisors. We recommend the portfolio, meaning all 5 of them at once, just because you can well diversify your risk across multiple different strategies without compromising the return. Like you can lower your risk without lowering the return in a sense. But again, we have to, if you're looking for 5, 10, 20% a month, don't even bother. It's not the right mindset to have. We're not going to do that. We're not even going to sell them to you if you want that, because it's just not how investing works, right? Hedge funds don't even do 15, 20% a year. So why are we trying to do that in a month? Stupid. Right. If you're good with 1, 2, 3% a month, we can work with you. And these EAs can be used on funded accounts as well. Not with Nova, but with like FTMO, my Forex funds, I think the Funded Trader Plus. They even have challenges. They don't have time limits, so you can even use that on a challenge like that. Something like that. There's multiple different ways. All right, anyways, guys, I got to get rolling, but it was great talking to you all. Thank you for hopping on. We will talk to you guys if you're interested in hopping on later at 2 p.m. Eastern. I will send links in Telegram. I'll send it probably to IG as well and Discord so you guys have it. So till then, appreciate your time, and we'll talk to you guys later.
All right. Cheers, guys.